Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kesler, and we ask ourselves, do our dollars make sense? Every Tuesday, I'm here with another episode getting into life insurance, the infinite banking concept, anything money related. Holler at your girl. There's a reason they call me the single millionaire chick. Okay. If you are watching on YouTube, I am going through a little hair transition right now. All right, I'm growing out the bangs. Okay, it's kind of time for the next evolution of Hannah Kesler. And my mentor, he's kind of like on my butt about it. And even my dad has said something about it, where sometimes if I cut my bangs, this is literally what dad says. He says, Hannah, it looks like they put a bowl on the top of your head and they just cut around the bowl. And when he first said that, I was like, I am embarrassed. Dad, did you really just say that? Do I really just look like I have a bowl cut? So it's kind of time for the new evolution of my brand, what's happening over here. And I'm going for the curtain bangs type of look. All right. So don't be harsh. All right. They're still growing out right now. But what are your thoughts? You like it? You like it? The next little generation of the Hannah Kesler brand? Tell me your thoughts. Leave a comment down below. Also, please hit the subscribe button, leave a comment, like the video, give it 5 stars on the podcast platform. That really helps your girl out. And as always, if you have more topics that you want me to get deeper into, send me an email, hannah@themoneymultiplier.com, and I can continue to create content that y'all want to see. Very helpful because, as always, I can keep doing my own little topics over here that I keep thinking of and just questions that come up when I'm doing my one-on-one strategy calls with folks. But I also want to know, what do y'all want to see? You know, I really want to get your guys' feedback too. But today's episode, we're going to get into the hard questions that you should ask any infinite banking agent. Now, when this episode launches, actually, I'm going to be on the West Coast. I am in LA, California, as this episode airs. And I am speaking in Hollywood at a TV studio. Okay, that's kind of cool. Follow me on my social media channels. You'll see some updates as I'm hitting the road and doing some more stuff. But super excited. I'm out here on the West Coast, my friends. Reach out to me if you are out here as well. Maybe we can link up one-on-one for some coffee or grab a bite to eat or something. But as I mentioned, today's episode, we're going to get into the hard questions that you should ask any infinite banking agent, or essentially how to find an infinite banking agent that you can trust. Because not all infinite banking agents are created equally, and a policy, if it's not designed on the forefront for this high immediate cash value, it's just a traditional whole life policy, okay? I can't tell you how many folks have reached out to me and they're like, Hannah, I saw you speak on stage, or I've been following your show for a minute, and I reached out to my life insurance agent who my family and I who have been dealing with for a long, long time, and I don't have cash value the first year. What's going on? And truthfully, the reason is because that agent just didn't design the policy correctly. And either they don't know how to, maybe that insurance company doesn't allow paid up edition riders on their policy, or again, the agent just simply does not know how to do it. But the strategy matters a lot. Okay, I always say that the strategy of utilizing the policies matter more than just the design itself, but the design also matters just as much, okay, if you're kind of catching my drift. So today I'm going to give you the hard questions that you should be asking before you work with anybody getting into the realm of the infinite banking space, and even including us. You should ask me these same questions as well, because you shouldn't blindly just trust anybody with your money. And this concept is very, very powerful But bad policy design or even bad implementation can sometimes create non-favorable outcomes. So I don't want y'all just to walk in purchasing policies because that agent said, oh, this one's the best one for you. You need to understand the design. You need to understand the system and what problem is this policy truly going to solve for me. So again, I really want to get deeper into the questions that you should be asking. And without further ado, let's get into the episode. If you've been following my channel for a little bit, you will follow along closely with some of these questions, okay? Because a question, number one, that you should be asking is, how is this policy designed? What is the differences or the splits between my base premium and my paid up editions? What's the flexibility with my paid up edition rider? Okay, some companies, they will allow you to be totally flexible with your PUA premium, where as long as you pay the minimum, which is $10 a month or $120 for the year to keep your paid up editions attached onto the policy, you have that full flexibility to go as minimum as $10 a month or all the way up to where your PUA premium is set. Where other companies, and some of even the companies that I do business with, there's limitations to if you need to decrease your PUA premium, and let's say you have to decrease it for the next 2 years. If you do not pay your max PUA premium in that 3rd year and you just continue to pay the minimum, now moving forward, your PUA premiums, you're only going to be able to do the minimal amount that you have been making over those last 3 years. So you need to understand the flexibility when it comes to your paid up editions, because as we know, being infinite banking users, okay, if you do have your own policy, you know that your paid up edition premium is not a mandatory premium that you have to pay inside of your policy. But if you do have to lower it down, you want to understand the flexibility of what your PUA premium can do. Because what would really suck is, let's say you have to decrease it for 2-3 years, and then you come back and you're like, all right, cash flow is doing better. I'm ready to continue doing that same premium, the full base, full PUA. And they got to come back to you, the agent, and say, well, hey, because you didn't pay your maximum PUA premiums over the last X amount of years, actually the most that you can do is just that minimum that you have been doing. So how is the policy designed? What's the splits between the base and the PUA? What is the flexibility with my paid up edition rider or that premium? And even getting into the cash value efficiency points. Okay, when does my cash on cash hit? Meaning that when I put in my $1,000 a month of premium, when does my cash value grow by that same $1,000 a month of premium? And when the policy is designed correctly, it should be anywhere between year 3 to year 5, the cash on cash standpoint. And then also you can look at the cash, what's it called? The cash accumulation. That's not right. The cash accumulation, oh my gosh, I'm blanking right now. What is it called again? The accumulative cash on cash. There we go, Hannah. Thank you. The accumulative cash on cash, meaning that over the course of these 7 years, I've put in $70,000 of premium into this policy. When does my accumulated cash value bucket rise and exceed that full $70,000 that I put in over the course of the 7 years? And that cumulative cash on cash should happen anywhere between year 7 to year 9 if it's built properly. All right, so really ask about those cash efficiency standpoints. And you'll also know this if you look into your policy illustration, you will be able to find this answer for yourself. But truly ask, well, when is the cash efficiency standpoints of number 1, the cash on cash in that year, and then number 2, the accumulative cash on cash, when do those efficiency points hit? And I give you some guidelines, okay? Also, you should be asking about your MEC limits. MEC, the modified endowment contract. What is my MEC limits for this year? Is there flexibility here? How do I know when my MEC limits are going to increase? How does the MEC limits increase? And obviously, if you've been following along to the podcast channel, we've definitely gone deeper and deeper into MEC as well. But you should know where your MEC limit is at the start of your policy, because just to give you kind of a debrief real quick, MEC limits, moving target. All right. Anytime that there's a quote unquote material change that's happening in the policy, meaning you pay a premium, let's say you pay up your premiums, if there's a health rating class that gets changed, if you take yourself from tobacco rates to non-tobacco rates, because FYI, PSA, you can always update the health rating on your policy. I did that back in the day when I was a terrible teenager smoking cigarettes, got tobacco ratings on all my early policies, and I just updated them. I got them changed to a non-tobacco rating. So how does that affect your MEC limits? Just understand where your MEC limit is at the start of the policy, because it will change. All right. MEC's a moving target. Anytime there's that material change, it will move, but just understand where your MEC limits are at. I would even ask about the early liquidity. When I put my money inside this policy, how soon can I access that cash value within inside of my policy? Is it immediately? I can tell you, just with our 6 companies that we personally do business with, within 30 days. You got access to your cash values, no ifs, ands, or buts. There's one company that I have that there is a waiting period. You got to wait 12 months to use the cash value. And most of the time I'm taking like my children policies with them, because I love the maturity growth in those types of policies compared to like my other companies. And actually, to that point, okay, ADD is going off, but like I would even recommend working with an agent who does do business with multiple companies. If you're working with somebody who's just a captive agent, they only have one insurance company under their belt, the question kind of becomes, well, are you just sending me to this company because you have to send me there because you're a captive agent? Or is this truly the best company based on my scenario, my age, how we're designing the policy, and truly the purpose of what problem this is solving for me? Just a little side note, I didn't even think about that as I was thinking about this episode today, but that's a very, very good one. But you should know about the early liquidity of your policy. When can you have access to the cash value? How much are you going to have access to immediately? And truthfully too, even if you have no need or use for your cash value inside of your policy, it is a place that you can keep your dollars so that when you are ready to go and deploy the capital, you keep them liquid, you keep the money liquid inside of there. And then when the time comes that you need to go and buy a product, a service, or an investment, the dollars are there and they're accessible to you. So even if you have no immediate use for the cash value in your policy, I don't think there's any better a place to store your money than inside of your whole life contracts. I actually just went through today and I looked over all of the my policy portfolios, and I was getting updates on where are my cash values at, how much do I have in loans outstanding on my policies right now, when are my premiums coming due, and so another big PSA, you kind of stay up to date with your policies and make sure you're planning for premiums and loan interest when I do have to pay that back. That's another thing, ask your agent, hey, what's the current loan interest rate of this insurance company right now? I can say like between our 6 companies, contractually, loan interest rate can be anywhere from 0 to 8%. So make sure you know what your loan interest rate is, because even when I was updating my net worth sheet just this past today, I was going in there and I was seeing, hey, has there been any changes to the policy loan interest? And I'm happy to report back that no, there hasn't been any changes of it being greater. As a matter of fact, 2 of my policies, the loan interest actually decreased. So it's even good to stay on top of loan interest, because then you'll know at the end of the year, well, hey, how much loan interest do I got to pay to the insurance company? So loan interest, I use loan interest a lot, especially when I am using my policies for my investment lifestyle. I want to know how much I got to pay them, because I want it to make sense from a return on investment standpoint. If I'm going to use this borrowed collateralized money for my whole life contracts, and let's say I got to pay a 5% loan interest rate, am I making greater returns in the investment deal that I'm doing by using other people's money, OPM, other people's money? So whole life is not automatically infinite banking. It all depends on the policy design, making sure that you have sufficient overfunded paid up edition riders that are attached on that allow you to have the cash value immediately. And even to that point, with like some policy, like the insurance companies themselves, a lot of you will come to me and say, hey, Hannah, I want to have a mass mutual policy, or I want to have a Mutual of Omaha policy, or a State Farm policy, and I get it, because they're the big names, right? You see them posted up on the ball fields, you see their commercials on television, but even those brand name companies, they're no better or different than the other mutually owned companies that are out there. So there's companies that I even use that not a lot of us really know about, because they're not as mainstream as these other big boys that are out there in the field. But the design matters so much more than the brand hype, if you're catching my drift. So even though like Mass Mutual, yeah, they're a great, strong, mutually owned company, but hey, there's a waiting period of how quickly you can access the cash value that's inside of there. And that could kind of pivot you, because you may want the immediate access to cash. So just a few questions to ask. I kind of want to get deeper into, the transparency of, what are these life insurance agents making on your policy? Because, hey, that's how we get paid, no matter if you just go directly to the insurance company or if you reach out to an independent agent directly, you're always going to have an agent on your policy that's going to get paid a commission on your policy. And that's okay, right? That's why I always say you're never going to pay me a single check or a dime for anything, because I get paid directly from the insurance company. And just to kind of bring you into the wheelhouse, us as life insurance agents, we really get paid on the base premium of that policy. So that's why I always say I take anywhere from a 60 to 90% cut in my commission by designing the policy this way, because I am only getting paid on that base premium. And depending on how your policy is designed, let's say 40 base, 60 PUA, or 10 base, 90 PUA, the agent on that case is really getting paid based on the base premium. But I'll also say this, even if your agent is like telling you, hey, have a good, strong base premium, have a good foundation. I personally wouldn't go any higher than 40% of my premium going towards my base premium. At the age that I'm at right now, okay, children, a little bit different. They are great for 50 base or even 60 base. My first ever policy when I was 18, Dad designed that policy 60 base, 40 paid up editions. And back in the day, I didn't understand exactly why he did it. I was actually kind of pissed, because I'm like, Dad, I want my cash. What do you mean you're designing it 60 base, 40 PUA? But I understand now why he did that, because that base premium is really what's going to keep thriving, if you will, the cash value in your policy. when you are forced to drop off those paid up additions. And the stronger base premium that you have in your policy, the longer and even more that you can continue to overfund into those paid up additions. So you should never feel weird about asking somebody how they get paid. And I'm very transparent about that. I had a guy just last week, he's doing a large policy. He's putting over 250 grand a year into this new policy. And he's like, Hannah, I want to understand, how are you getting paid on this? And I was like, well, here's how I get paid. And I was just honest with him, right? So again, no matter who you go with for your policy, there's always going to be an agent that receives a commission check on your policy. It just depends on how much are they receiving as commission. Because again, we really just get paid on that base premium. Like, yeah, we get paid a little bit on the paid up additions, but it's very, very small. It's more so coming from the base premium, because on the paid up additions, it's like 3%. It's like 3% of that PUA is what the agent's going to get paid, depending on the contract level, depending on the insurance company it's with, etc. There's a lot of other nuances there, but you can even get clear on, hey, how much are you making off of me starting this policy with you? I mean, obviously I ain't paying you a retainer or a monthly fee, anything like that. So how are you getting paid, if that matters to you? This is a question that you can be asking. How about the question of what happens if my life changes? All right, I did a whole episode on this, so I won't go so deep down this rabbit hole. Go and rewatch my episode of what happens after I commit to becoming my own banker. But it's a big one, right? You need to get prepped for the unforeseen times. What if you have a job loss? Your income drops. Can your premiums be adjusted? Is there some flexibility there? And your financial system should bend with your life, not just totally break it because, oh, I had a downtime, I had a downfall in my life. So high level, I can just speak for my policies that I'm writing and designing. Base premium is that required premium that has to get paid inside of the policy. Hey, sorry to interrupt the episode here, but I want to take a quick break. If what you're hearing today has made you curious about infinite banking, how it works, I want you to go watch my free presentation. In it, I walk you through the same steps that my family took to pay off $984,000 of debt in 39 months, and how we've been able to recycle and recapture every single dollar since then. This isn't theory. This is real. I mean, this is what the wealthy have been using over 200 years to keep the money within the family. This is literally where banks, conventional banks, store a boatload of their dollars at. And it's the same process that we've helped thousands of families across the country put into action. So go to themoneymultiplier.com/presentation and see for yourself how you can start taking control of your money today. All right, let's get back into the episode. So if you ever needed to, you can always go in there and lower down the PUA premiums. We kind of discussed that a little bit earlier on this episode, but know what is the minimum to keep the policy alive and active. Ask the question of, can my cash value be used to pay policy premium? Do I have the non-forfeiture option on my policy where there's an APL, automatic premium loan? So if I forget or something happens, I get hospitalized, and let's say I'm out of it for the next 2 months, well, I want to make sure that there's precautions set up so that if I do forget to pay my premium, then this automatic premium loan will kick in and the cash value will just automatically pay my base premium of my contract. So just understand really how flexible is the policy, what's the minimum to keep it alive and active, and even ask the questions of, can I ever even stop paying my premiums? What are my options there? Can I reduce pay up the contract? What happens if I need to exercise this policy because I come into a terminal illness or a chronic illness? Hey, I can say for our policies, there is terminal and chronic illness riders on the policies. Even sometimes the company will call it the accelerated death benefit rider. in quotes, if you're listening to me, not watching me, but in quotes, the accelerated death benefit rider, which is just the fancy term for the chronic and terminal illness riders, because if something were to happen, you come into a terminal illness, meaning less than 12 months to live, or a chronic illness, meaning you can't perform 2 of the 6 daily activities of living. Hey, if that rider is on there, because most of the time it's a free of charge rider, that's why I added on to all the policies, because it's free, why not? Then the insurance company will start paying out that death benefit money early to you, so you can use those funds for assisted living, medical care, the medical expenses, et cetera, et cetera. So I would even ask that question, is there a terminal and chronic illness rider on this policy? If not, can I add it? You could even add other riders like the waiver of disability rider. If you ever get disabled, you can't work anymore, if I wanted to, how could I add an extra premium cost to get this waiver of premium disability rider attached onto my policy? And then the premiums would just get paid for. Essentially, you're covered. You don't got to pay anything. You got a grace period there because you did come into some disability time, and thus you're not working, thus you're not producing the income, thus I don't know if I can pay my premium this month, right? You see what I'm saying? So there's always that waiver of premium disability rider that you could be adding onto your policies too. Another question is, how accessible is my money? Okay, what is the time frame? What is the process to get my cash value out? Is it a check? Can I request it online? Are they going to just ACH the money, like a direct deposit into my checking account? Even ask ways of how you can pay back your policy loans. Okay, like, is there a way that I can set myself up for automatic loan repayments where I don't even have to think about it? Some of my companies allow that, setting up those automatic premium loans. Really understand how accessible your money is through policy loans, because no, we're not withdrawing the capital. I mean, sometimes even my folks will call up and it's been a while and they won't ask for our help in this whole process, and they call them up and they say, hey, I want to withdraw $10,000 from my policy. No, don't withdraw the capital right now. Withdrawing the cash does have a place and purpose, more so during retirement, but be asking about policy loans. If you're going to call up and do this directly with the insurance company, you need to make sure you're using the correct terminology of policy loans instead of them just withdrawing the cash value out. So understand the policy loans, the timelines, your loan interest rate, okay, we discussed that, and what is the process like? Is it ACH? Is it direct deposit? Is it a check that they send me in the mail? Because if you don't understand how to access your money, you don't understand the system quite yet. So make sure that you do have somebody who's going to be there to help you with the process of this all. I always say it's not so much about the product, it's all about the process and how we're utilizing the policy for the banking function in our life. And the process is so much more than just the policy design, even though policy design is very, very important. But how am I using this? These are my goals that I'm trying to accomplish, whether it's paying off debt, funding taxes, charitable giving, retirement, vacations I'm taking, me and my spouse. How does that money get in and out and flow out of the system? And so that's why I put so much emphasis on our implementation team, because they're there to help you. But my biggest gripe this month, y'all, is you guys are kind of ticking me off because you're not using and valuing the implementation team. So use your I-team specialist, especially if you are a part of the Money Multiplier. You have your designated person that they are there day in and day out, that they will coach you. They will show you how to fish, and they will be there to ask the questions on behalf of you to the insurance company directly. Oh, which kind of gets into my next perfect point, perfect segue into the question, what support happens after I buy the policy? And this is a huge I can never say this word, differentiate. All right, I give up. You see what I'm saying? This is huge when you're implementing infinite banking. Again, it's the process. It's not so much the product. So ask about, what does the ongoing mentorship look like? What is the implementation support? Am I going to have reviews more than just one time every single year? Even with my tax guy, I did not know until just as of late, that you should be having more than just one meeting a year with your tax professional. Oh, Hannah did not know that. And now that I have a good tax person, they're like, hey, we're coming into the next quarter. Let's have another conversation together. I'm like, perfect. Yay. So then I'm not sitting there at the end of the year thinking, what do I need to do to prep and minimize my tax liability? It's the same thing within the infinite banking concept. So have more than just those annual reviews and continue on the education. That's why I do the podcast show. This is why I have my Monday mornings live stream that goes out every Thursday, 9 a.m. Eastern time, because the sale is just the beginning, but it's not the end to that relationship. And a lot of the times I even still get people, they will call my line and they're like, Hannah, I have one of these policies, but I can't get the guy who sold it to me to give me a call back. And I just don't know how to use this thing. Can you help me? So I get it. Sometimes it's like trying to get a hold of the Pope for these life insurance agents just to give you a call back because you don't understand 100% of what you have here. So truthfully, infinite banking without the coaching is almost like you getting gym equipment without learning how to use it. You see it? You see what I'm saying? You catch my drift again? All right, another question you should be asking. What problem is this policy solving for me? All right. Infinite banking is not a one size fits all. Your needs and goals may be different than my needs and my goals. Somebody who is 9 years old, they're in a different financial position than somebody who's 90 years old. And my 9-year-old financing their bicycles, their, let's say, field trips for school. Maybe they go to private school. They got to pay the private school tuition. Their needs and goals are just different than my person who's 90 and within retirement, okay? So each policy design should be different based on that individual's needs and goals. So again, it's not a one size fits all. Every policy does have a purpose. The examples: business liquidity, debt recapture, building the family banking system, retirement supplement, opportunity fund for investments when they do appear. And if that agent cannot clearly explain why you need it, you should be walking away. Just my humble opinion. How about asking, what are the guarantees versus the non-guarantees inside of my policy? All right. Because in a whole life contract, you have a guaranteed interest and guaranteed death benefit that the insurance company has to give you. What is that guaranteed interest? I would ask that question. What is the current dividend scale? What has dividends been the last 5 years? Where do we think that dividends are going to go from now until 5 years into the future? Ask some of those questions, all right? I can say this, the worst thing that can ever happen inside of a whole life contract is the insurance company just doesn't pay out a dividend, but they have to pay that guaranteed interest, no ifs, ands, or buts. And sometimes when I'm designing policies, I'm going to kind of put my eggs into the basket of the guarantees. I'd rather have a stronger guarantee inside of my policy rather than betting it on the dividend and having a higher dividend, right? So understand your guarantees, understand your dividends, understand your policy illustration. You should know how to read your illustration. I did do an episode on my live stream about how to read your policy illustration, so you should go and rewatch that episode too. But we got to understand too that illustrations are not promises. And I'll say this, if your agent is only showing you the non-guaranteed values of your policy, that's a little shicey. You shouldn't be looking at just the non-guarantees. You need to also understand worst case scenario. What are my guarantees looking like as well? Especially in an IUL contract. But I digress. We're only talking about whole life today. And you deserve to understand what's contractual and just what's hypothetical. To go back on the hypothetical freaking IUL illustrations, literally top of the page, it says, this is a hypothetical tabular detail page. Whatever. All right. Red flags to watch out for. Number 1, this replaces all investing. No. A whole life policy is not an investment. A whole life contract is the place of where you store your capital. You store the capital, you protect it, and then through the policies, you can buy your investments, the things that actually involve some risk. So whole life does not replace the investing and the financing of the transactions that you're doing right now. No, it does not replace all investing. Number 2 red flag that you should probably maybe look out for is, this is a get rich quick kind of deal. This is better than all of the investments that you're already doing, and you're just going to get super stinking rich right now. No. This is not a get rich quick kind of deal. This is a lifestyle. This is a process. You're adding this to your entire financial life. So this whole mentality of, if you think you're going to be a millionaire overnight using whole life contracts, you need to rethink your thinking. Another red flag is you never have to repay your loans. Ooh. I hit on this from time to time where I say that your policy loans are not required to get paid back, but you should pay it back. You should be an honest banker with yourself. And just my 2 cents information, if I'm going to be using my policies to buy myself non-cash flowing assets, like a car, like a boat, taxes, stuff of that nature, I'm setting up a loan repayment to myself, charging myself interest, and paying myself back those policy loans every month. But if I'm using this for investments, like doing lending deals, buying more real estate, someday soon, maybe getting into stock options trading, I'm coming for you. I've been looking at that stuff. But if I'm using my policy loans for acquiring more cash flowing assets, sometimes I'm not paying back the policy loan. But you want to make sure that you at minimum always pay your policy loan interest. Okay? Big red flag too. This works for everybody. I think it can work for everybody, honestly. It's just, how disciplined are you? You see what I'm saying? How disciplined are you? What's your cash flow looking like? Can it work for everybody? Absolutely. But it's almost like saying, can a credit card or a home equity line of credit work for everybody? It could, as long as you're disciplined with it. If you're not, then it won't be. Hold on, I'm looking to my left right now if you're watching me on YouTube. Momo has been so clingy today. She wants to always just be near me today. She's kind of being cute. She's sitting over in the little chair over there. So this works for everybody. It can, but sometimes you may not be in the correct position to start it right now. And more times than not, I'm actually turning people down to even starting the approval process for them, because I'm like, y'all, you're just not ready right now. You need to produce more income. You need to minimize your expenses. You got a spending problem going on, not so much having the control of the cash flow. It's more so you need to be more disciplined with your money. So definitely watch out for that. And also, if your agent has that mentality that the highest dividend equals the best company, no, that's inaccurate. I even have a company, again, one of the big boys out there, that have great dividend history, but they kind of suck to work with because every time you call in to policy servicing, it's like, you can't get a hold of anybody, or sitting on wait and on hold for a long time. And I don't know, I'd rather work with a company that's just easier to deal with, that actually gives me that Southern hospitality, right? And they kind of treat me more as a client rather than so much of a number. All right. So having the perspective that the highest dividend equals the best company, no, there's more quirks. How are you designing the policy? Yeah, ask about the dividend history and what is the rate been. Ask about loan interest. Ask about your policy design, because all of those moving parts together, that's why, again, some companies are going to cater better to you compared to other ones. So if it does sound too perfect, you're probably not getting the full story. But, I get that a lot when it does come to IBC, because people are like, Hannah, this just sounds too good to be true. And I get it. I know. That's why it took Dad 2 years to start all of this stuff. But if you truly know what's going on within the back doors, I think that would truly make it an easier way to get into this, all right, and feel more confident as you're making this decision for yourself. I was actually just talking to one of my clients who's 70, and we're actually doing a 1035 with one of her IUL policies, because I pointed out to her, hey, girly girl, look over here. Look what's happening with that renewal cost of insurance. Look at how your guaranteed values are performing and even your non-guaranteed values. You literally ain't breaking even. You're actually losing money every single month by putting dollars inside of this type of IUL, this policy. And even for her, she's like, I just don't have as long to live. I can't afford a screw up here within my policy. So I wish everybody really looked at this as closely as what she did, and asking these very sound questions, because it is important, all right, to understand all the moving mechanics behind it. Doesn't mean you have to be an expert, but just know what is truly going on in the back office of your policy, okay? So what does a good infinite banking agent look like? I think it is somebody who educates. They don't pressure for the sale. They can explain the trade-offs of, all right, if you do more into the base versus the PUA, here's the pros and cons versus the other way. You can discuss the flexibility with that agent, and they know how to explain clearly in layman terms the flexibility back with you. They can think long range with you and not just for that short-term mentality. And they prioritize the understanding and for you to understand it. Again, implementation team. That's why we put so much emphasis and resources backing the I team, because the right advisor makes you feel informed, but not rushed to make that decision. And when they are trustworthy, they really teach this to you first rather than just selling to you. So really, to go back to like one of my red flags, which was, hey, if it sounds too good to be true, it probably is. I mean, there is some truth to that, but if you can justify all of the truths in the good sounding nature of, oh, okay, well, this makes sense why it's acting this way, you just got to think for yourself and question. I mean, that's really where my mind is going. Just think for yourself and question. I've given y'all some good questions that you should be asking to your agent. I would even add in there, make sure who you're working with is a certified NNI practitioner through the Nelson Nash Institute. We had to go through some teachings. We had to make sure that we are educating the public in the correct manner. And that's the whole reason that the NNI is even there, is just to really protect the policyholders and families. Because infinite banking is not magic. If somebody's coming to you and explaining all of the shiny objects, but not so much the cons to the infinite banking concept, there's maybe something deeper that I would look into. Make sure you vibe with your agent too, you know? Like, probably some people will find my show, but then they go to like Jonah Dew or Chris Noggle or Stephen Nagy because they like their vibes better. And that's okay. You know, work with somebody that you truly, truly vibe with, because it's a system, and the system requires good design. It requires great implementation once it's in force. It does require discipline. I think we know that, especially for y'all who've been listening to me for some time, and just the support. And it works the best when the understanding is just stronger than the emotional buying and the emotional purchase there. That's why it takes me so long just to have these deep one-on-one conversations with people where we are talking for well over an hour and a half on each conversation, because I'm like, I just want you to get this stuff. Because I don't want you coming back to me in like 3 years from now saying, Hannah, I thought when I put money inside of this policy, I would be able to access my full entire death benefit to use. No, that's not how it works. Or how about this one? This one came back. My good colleague called me up and she goes, girl, get this. Somebody literally just asked me, Hannah, I thought when I pay my premium that every time I pay my premium, it's paying back my policy loans as well. How would that make any sense? All right, and I get it. Okay, I got to digress. I understand this is a new world for people. But seriously? Why would you think that? And anyways, why would you think that is my question. No, it does not. Okay, short answer. No, it does not. All right, premium deposit is one bucket. Loan repayment is another bucket. Premium deposits is new money going in. Loan repayments equals you replenishing the cash value that's inside of your policy. But I want y'all to truly ask these harder questions, okay? Just stop outsourcing blindly. You know, lean on AI even too. Sometimes AI can kind of piss me off because they'll kind of lead you down like a rabbit hole where it's like, no, this is totally inaccurate, but it's okay. You know, we can get into those conversations. But you should be asking these harder questions. Stop just totally outsourcing blindly. Again, think for yourself and question. Pull sources from multiple locations. It's almost like politics. Like personally, I look at all sides of the spectrum. I'm not just going to one place to get all my sourcing from. I'm going to think for myself and question. But then you also need to truly learn how the money works. Do you understand this? Does this align with your goals? Does this advisor, money mentor, infinite banking practitioner, do they truly educate me, and do I feel calm talking with them, or do I feel more so of a pressure here when I am asking some questions? The goal isn't to find a perfect policy. I mean, it is kind of, but it's really to truly find a trustworthy guide who can help you as you evolve and develop through this new world of IBC, because the financial confidence comes from understanding, not just blindly trusting somebody. And a good IBC agent is not going to fear your questions. They're going to welcome you to it. So that's just how I personally think and behave. I say all the time, y'all, if you don't want to use me, you don't like my father, you don't like the money multiplier, you don't like our vibe, again, just go with somebody who is a certified NNI practitioner. That would be my biggest advice. So don't just look for somebody who can sell you a policy. Look for someone who can help you build a financial system that actually fits your life. And write your questions down, okay? When you get on these strategy calls with people, you need to write your questions down, because you're not going to remember everything up here when you're on the phone or Zoom call with them. Write your questions down, because a short pencil is better than a long memory, my friends. But other than that, I think that's really all my thoughts that I have here today. Hopefully y'all wrote down some of these questions to ask your agent. And if I'm your agent and you want to go through some of this stuff with moi, I'm here. You know how to get a hold of me. Send me an email, hannah@themoneymultiplier.com. And what do we got coming up? All right, we're here into June. Next month, July, we got July 4th coming up, which, I'm excited. We're going to be at Lake of the Ozarks. So all of my Midwest folks, if you're out there in the Ozarks area, I'm going to be coming out for a few weeks, hanging out with Mom and Pops and Pipey, their dog, Piper. And then we got Boston. I'm going to be up there for a Lafayette Life retreat. I go to Mexico City for some training with my mentor. And what else? Here, let me look at my calendar. Into July, really no speaking events. I have some fun stuff planned. I'm going to be up in my Wyoming floating down a river because, like, why not? Got invited to Wyoming. Going to go float. And then I'm going to hop in my van at the end of July and make my way from Florida up to Indianapolis. So got some stuff, and I have some stops I'm going to be making along the way in Tennessee. But I'm here. Please reach out if you got the questions. Again, hit the subscribe button. Leave a comment down below. I'm always here to help and support you. But until next week, as Mama TK always says, make good choices today because the choices you make today will affect your future. Love y'all. See you Money Multipliers next week. Hey y'all, if you've made it this far, this is where most people stop, and that's why they continue to be stuck with their money. Continue on with your education. Click right here. It'll take you to the next video.